History tells us that every single time the market has gone down, they've always gone to an all-time high because companies continue to make more money, they continue to innovate, and our lives continue to get better. Hey guys, Omar Khan here from Theta Trading, and welcome to today's video. And today's video is very topical. And the reason I wanted to do this presentation today and this commentary is because the markets are in a really tough spot. So how exactly do we navigate a bear market? First thing I want to ask you guys, if you guys enjoy these videos, please hit the like button, hit that subscribe button if you want to be notified, hit the notification button. But we would love to get our subscriber count to 1,000. And if you guys could help us, that would be greatly appreciated. Hit that like button. It really helps the YouTube algorithm if you find this information to be valuable. Now, getting back to today's topic, how do we navigate a bear market? Well, the first thing I will say, I've been trading for over 23 years now, 24 years now, since 1998. And I have witnessed multiple bear markets, okay? Now, this one is pretty bad. Now, what exactly is causing this bear market? What's causing this bear market is, actually, I should go into first of all, what is the definition of a bear market? Well, first, the definition of a bear market, the broader definition is a pullback of 20% or greater from the peak. Now, that's typically the definition of a bear market. Now, in the NASDAQ, guys, the NASDAQ being a tech-heavy index, that has taken a substantial beating, more than 20%. We're around 30% right now, and who knows how much worse it'll get. But right now, we're about 30%. So it's fairly bad as it is right now. That doesn't mean it won't get worse. That doesn't mean nothing will happen. It just means that it's pretty bad right now. Now, it may snap back tomorrow and get better, but the market is digesting a lot of information. What information is it digesting? Well, during COVID, the governments around the world printed a lot of money. Now, this is now kind of rearing its ugly head along with the war in Ukraine. What you have is a combination of a lot of inflation. You can see the inflation numbers. If you go to the grocery store, the gas station, you can see inflation is high. Things just cost more. And what banks around the world, central banks and governments have to do when interest rates are high and inflation is high, when inflation is high, what they have to do is they have to raise interest rates, right? And the reason they want to raise interest rate is because they want to slow the economy down so it doesn't overheat and go into a major recession. Now, the fear is that maybe they may increase rates too much and slow the economy down too fast, too far. Now, that is a concern. All this equates to the war in Ukraine, inflation, supply chain concerns. All it equates to is uncertainty. And that's the one thing the market hates. It doesn't like uncertainty. The stock market is a forward-looking mechanism. It's looking forward 12 months. And it's saying to itself, well, supply chain issues are there. I don't see any relief in sight with inflation, and this war is still going on. If one of these things gets better, the market could turn on a dime like this. But ultimately, what drives markets in the long run is the amount of money companies make or don't make. And this is why the first rule in a bear market, how to navigate a bear market, is don't panic. That's the first rule, okay? Just because you see your stock value down, or the market's down, and everyone's calling for doom and gloom, don't panic. Look at the evidence, not the opinions of people online or people on the news. Don't listen to their opinion. Understand what you've invested and why you've invested it. Actually, I'm not saying don't listen to them entirely. Like if you think that it's a good idea to listen to some people and you want to get a perspective and stuff like that, but at the end of the day, you cannot panic, right? What do I own and why do I own it? Okay, that is the second rule of a bear market for me. When the markets are down, I look at my stocks and I say, okay, my stocks are down a considerable amount right now. Everyone's hurting right now. But I ask myself, are my companies making any less money? This is what we went to. What we're talking about is ultimately how companies are valued long-term is the amount of money they make or don't make. So if my company, the companies I'm invested in, are making money, and maybe they're making more money than ever, then I'm not as worried. I understand what I've invested in and why I've invested in it. Now, third rule of investing in bear markets, how to navigate them, is do not use margin. If you do use margin, be very careful of how much margin you use. Now, what exactly is margin? Well, margin is when you use your money and someone else's money. You can borrow money. If you have a margin account, you're able to trade with more money than you have. So, for example, if I have $1,000 in my account, well, I can trade with about $3,000. And that really depends on jurisdiction to jurisdiction, but the system will allow you to trade with a lot more money than you have if you have a margin account. Now, the reason that can get very tempting is because when the markets are really, really doing well, we tend to take on way too much risk. Markets go higher and higher, and you start thinking, I can't lose. I just keep making money. I just keep making money. And then a bear market happens, like we're going through now. And something just pops up out of the blue, like COVID did a couple years ago. And now, all of a sudden, you are in a big bear market, and you have agreed to buy way more stock than you have money for. So what that does is that really, really makes your losses far greater on the downside. So bear markets, guys, do happen and will happen again in the future. Our job is to navigate them without being panicked, understanding what we own and why we own it. But we will not be able to do that if we have too much of our stock. Because even if you have great companies and you get a margin call, and I'll define what a margin call is, guys. A margin call is when you no longer have enough money in your account to maintain the minimum amount of margin, the company that you're trading through, the brokerage, they will go into your account and just start selling your shares off until you hit those margin requirements. Now, margin, again, is similar to, let's say you're buying a house. You buy a house for $500,000 and you put $100,000 down. Well, essentially, you're borrowing $400,000, right? It's only $100,000 of your own money in. When you're borrowing that money, you have to be very, very careful. In the stock market, movement is far greater and more volatile, generally speaking, than the real estate market. And it's also something that, you don't get a margin call in the real estate market. But you can get them in the stock market. But if you don't trade with more money than you have, then you won't get a margin call. So I cannot stress this enough, guys. Margin will beat you silly every single time the market declines. It'll lead to sleepless nights. It'll lead to stress, tossing and turning. And that's not the purpose of investing. If you know where your stocks are headed long term, the last place that you want to be is in a short-term position where you have to sell them at a major loss because you bought too much of them. And that is the definition of margin. Margin is using way more money or any more money than you have in your account. And again, I just want to reiterate the first three rules. Let's talk about them again. Don't panic. Just because the markets are panicking doesn't mean you need to panic. Understand what you own and why you own it. Look through your stocks. If you don't own stocks, if you own the index, look at it. Do I believe in these companies? We talked about this. Ultimately, what drives a stock higher or lower, long-term, not short-term. Short-term, the stock market is a popularity contest. Long-term, it's a weighing machine. Ultimately, what drives a stock higher or lower, longer term, is the amount of money that company makes or doesn't make. When you buy shares of a company, you are a part owner of that company. And your success will be based upon that company's success. So, for example, if that company is making more and more profits year after year after year, well, one would assume that stock price would inevitably follow. Now, in the short term, it might not because of all these other concerns we talked about. Inflation, interest rates, war, all these other things. Right now, the market doesn't care how much money your company's making. It just cares that there's all this other crap going on. So those are the first two rules. Third, and equally as important, if not the most important of all, is watch your margin. Again, margin is trading with more money than you have, and it can be absolutely deadly in bear markets. It'll keep you up at night. It'll stress you out. It'll make you toss and turn. It'll have knots in your stomach, and that's not the right way to invest. What you want to be around for is you want to be around for your inevitable picture to play out. If you believe the world's headed in a certain way and your companies are going to make a certain amount of money over the next couple of years, a year, 2, 3, 5, the last thing that you want to have happen is that you have to sell those stocks at a very low point because the market is being irrational. Just because the market is rational doesn't mean you need to be rational or I need to be rational. All right, let's take a look at the next lesson. Looking at history. What does history tell us? The stock market, since I've been investing and since 1998, I went through major stock market corrections. I went through 2000 and 2001, huge market correction. 08, 09, 2018, and many in between, okay? So these can and do and will happen again in the future, where you have these major downturns in the market and they just come out of the blue. COVID is another example. But what does history tell us? History tells us that every single time the market has gone down, and I'm talking about the S&P 500, even the NASDAQ, okay? Now, these are the two biggest markets in the United States. Every single time the markets have gone down, they've always gone to an all-time high. Why? Because companies continue to make more money, they continue to innovate, and our lives continue to get better. What that means is, again, when companies make a lot of money, right? Ask yourself, was Apple making this much money 5 years ago? Was Tesla making this much money 5 years ago? Was Coca-Cola making this much money 5 years ago? Was Walmart making this much money 5 years ago? They're probably making more money now than they've ever made. But that doesn't necessarily mean the market is going to reward it at all given times. So what we always have to look at is we have to look at history. History tells us that every single time the market has declined, it has gone back to an all-time high. And that's what really gives me comfort in these moments. I know what I own. I know I'm not in a margin call territory. I know what history teaches me, and history teaches me that every time the market declines, it goes back to an all-time high. I've been through this so many times. It's never fun. But if you're going to be an investor long-term, it's something you simply have to learn to deal with, okay? And the last lesson I'll give you, okay? This is the 5 rules, I guess, of investing in bear markets. The last lesson for me in a bear market is if I have more money, if I have more capital that I can access from a real estate investment or savings, and I don't need that money, be very clear about that. If I don't need that money, then that is something that I can use to buy when the market is low, right? When others are fearful, be greedy. And we are now in a 30% bear market as of May 12th, 2022. In the NASDAQ, there is a lot of fear out there. So if I have additional funds that I can use to average down, and I have been doing that, but the market's still going down, but this is when I want to be buying. Now, that's not any sort of recommendation, so don't take it that way. All I'm saying is, if you feel that your favorite stocks are on sale and you've got the money to buy them at these lower prices and you think they'll be worth more in the future, well, then you've got to make a decision as to whether that is the right decision for you. Anyways, guys, these are the lessons learned from bear markets that I have learned over almost my 25 years of trading and investing. Thank you so much for watching this video. If you guys have any suggestions on videos you'd like to see us create in the future, please let us know. Omar Khan again from Theta Trading. Hit that like button, hit that subscribe button, hit that notification bell, and we will see you soon, guys. Take care.